The role of social responsibility in Islamic finance is assuming importance in the contemporary debate on the Islamic banking and finance industry. Many advocates of Islamic banking and finance would suggest that Islamic banking and finance, by its very nature, is socially responsible. This is certainly true when it comes to the theory of Islamic banking and finance, but the way the industry has evolved over the last 45 years, the emphasis on social responsibility has become more and more marginalized. And it is the time for the industry to rethink over its stance on social responsibility. There is no doubt that Islamic banking and finance, by its very nature, is socially responsible. But when we look at the actual products and actual functionings of Islamic banking and finance, we find that it has not aligned itself with the global movement of social responsibility. Social responsibility emphasis is primarily in the West. Western corporates, whether they are financial corporates or other industrial corporates, have adopted a very well-defined regime of corporate social responsibility, which is not very obvious when it comes to Islamic banking and finance. Hence, it is important for Islamic banking and finance to come up with an explicit emphasis on social responsibility. And that emphasis should not be only in the written form, which in many cases in the West is the practice. There should be a genuine concern with social responsibility in Islamic banking and finance if Islamic banking and finance wants to survive and sustain as a phenomenon which is relevant to the needs of the Muslim communities all over the world. And it's not only the Muslim communities, but other communities, other underprivileged communities in the world. When we look at the Muslim population, global Muslim population, it is about 1.7 billion. Probably a conservative estimate would be about 1.5 billion Muslims living in this world. And about 80 to 90% of these Muslims are actually not very well off. Okay. So many of them are actually poor. And if Islamic banking and finance wants to sustain its operations, it will have to come up with financial products which are in line with the needs of underprivileged economies, underprivileged communities in the world. If I come up with a parallel between Islamic banking and microfinance, okay. Microfinance, as started by Professor Muhammad Yunus in the 1960s, 1970s, okay, it started more or less at the same time when the first Islamic bank was established in 1976 in Dubai. While microfinance, as advocated and practiced by Grameen Bank, has become a well-recognized global phenomenon, giving worldwide recognition to its founder, Islamic banking and finance has yet to receive that kind of recognition. Why is the case? It's basically because in case of microfinance, there is an explicit emphasis on social responsibility. In case of Grameen model, there is a very explicit emphasis on women empowerment. And I would say that Islamic banking and finance can become a hero, worldwide hero, if it emphasizes on the empowerment of communities, empowerment of underprivileged communities. If it wants to become relevant to the global communities, in that case it can commit itself to the welfare of the communities all over the world, not only in the Muslim societies and economies in the world. But we have to start from somewhere. I would suggest that Islamic banking and finance should show its commitment to the Muslim communities first. Why? Because the vast majority of the users of Islamic financial services are actually Muslims, and hence for purely marketing viewpoint, it makes sense for Islamic banks and financial institutions to show their commitment to Muslim communities around the world. And once its size has grown, it can bring relevance of its services to the communities all over the world. This has happened, for example, in the microfinance case. It started in Bangladesh, but now we find that there are practitioners of Grameen type of microfinance in the United States of America. And similarly, although Islamic banking and finance started in Egypt, in Malaysia, or in the Middle East, it can become relevant to the needs of the communities in Latin America, in North America, anywhere in the world, from America to the poorest countries in the African region. So social responsibility is important, number one, to emphasize the genuine Sharia compliancy of Islamic banking and finance. And number two, of course, for its own survival and sustainability of Islamic banking and finance, it's extremely important that those banks and financial institutions which are involved in Islamic banking and finance must commit themselves to the welfare of communities they are attempting to serve. In 2008, I spoke at a conference in South Africa on the role of social responsibility in Islamic investing. And guess what? Vast majority of people turned against me, saying that, oh, Islamic investing by its very nature is socially responsible. But I explained to them, this is true, that objectives of Sharia are very much in line with social responsibility. But when it comes to the practice of Islamic investing, this is actually a very, very narrow phenomenon. It is based on two screens, a sectoral screen and a set of financial screens. Sectoral screen makes sure that Islamic investments do not go into certain prohibited activities, the likes of gambling, the likes of alcohol-related industries, the likes of other unethical activities like pornography, and some other activities which are not strictly prohibited in Islam, for example, tobacco and weapons. These two things, tobacco and weapons, actually is an influence of the West on Islamic investing. And that's the only influence of Western socially responsible investing movement on Islamic investing. My view is that that influence needs to be increased. Why? Because inherently these concerns are there in Islamic doctrines. So when we talk about enhancing the role of social responsibility in Islamic investing, we are suggesting that Islamic investment funds or Islamic investment fund managers should become more engaged with the companies in which they are investing, to tell them that they have to be more socially responsible as well as more Sharia sensitive and Sharia compliant. When it comes to social responsibility, for example, in most of the Islamic funds, there is no explicit concern with environment. I am aware of some funds where environment and sustainability is being taken into account, but this is a very, very recent phenomenon. I believe that other areas, for example, labor relations, it's extremely important from Islamic viewpoint, and this is something which is emphasized upon in the Western tradition of social responsibility, and Islamic investing should take into account this kind of concerns. Environment, labor relations, and of course, welfare of the wider stakeholders. Islamic investing should not be all about the interests of the investors. Rather, it should take into account the wider social interests. If Islamic investing can contribute to the increase in the welfare of the communities in which Islamic investments are taking place, this will bring a lot of more credibility to Islamic investment or Islamic investing movement. When it comes to financial screens have nothing to do with social responsibility. If I refer to the most widely used financial screens, they have to do with debt equity ratio, they have to do with receivables as percentage of market capitalization, and of course they are related with cash plus interest bearing securities divided by market cap. The most widely used criteria would say that all these three financial ratios should be less than 33%. And this is the primary emphasis in Islamic investing when it comes to coming up with screens. Of course, as I suggested, sectoral screens are there, but there is more emphasis on financial screens. And I believe in order to enhance contents of social responsibility in Islamic investing, there is a need to come up with a detailed sectoral screening system which should allow Islamic banks, Islamic investment fund managers to invest in companies which are more socially responsible.